Hi everybody, welcome to the presentation today on X1 Frederick Street, which is our new Manchester student accommodation investment, and it's available at pre-launch pricing from £137,000. So here's the development. I'm going to go through it all in detail, but this gives you the first external shot of the scheme. Now, just before I dive into things, just to recap on who we are and what we do. So we specialise in helping investors purchase property across the UK. We don't charge any fees and we offer fully managed investments in the UK's best markets. So as I say, a couple of things to consider: no buyer fees, exclusive access, so off-market deals, launches before they go to our wider network, etc., etc. Expert guidance, so we've been doing this for years and years. The company's been running for 6 years, but we have dedicated staff with decades of experience. Fully compliant, obviously, with HMRC and the Property Redress Scheme, which is a legal requirement in the UK. We've got an investor network of plus 31,000 now, global, and our role is to help you from start to finish with your UK property investment. So we can help with finance solutions, legal representation, property management, company formation, tax advice, and we offer best in class service throughout that process as well. And now we've built up hundreds of 5-star reviews, so you can have a look on Trustpilot and see what investors have to say about us. So there's a quick introduction. Now let's get on to the development itself. I'm just going to give you a quick video summarising the project so you can get an understanding. So I think that gives you an idea, guys, but this is obviously the new launch here. These are the developers' previous projects, which have been a phenomenal success in terms of occupancy rates, delivery times, etc., etc. Salford University is just here. There's another one of the developers' projects, and then you're obviously right on top of Manchester city centre. So that should give you an understanding of where the development sits and where it's located, which is an incredibly desirable one. So let's summarise things and let's get into it then. So we partner with various developers, but X1 are the builder on this particular project, and we believe, based on our competition, what's out there, our due diligence and market research, that this is the best student accommodation investment on the market in the UK now. So who's this for? This is for investors that are seeking income generating institutional grade assets in a prime location from a developer with a great track record of delivery, occupancy rates and returns. And if you are looking for that, this obviously deserves your consideration. Now, it's a student accommodation project, what we call PBSA, purpose-built student accommodation, and this asset class offers guaranteed returns, above average rental yields, no running costs, minimal stamp duty, a low entry point, and a fully managed investment from your acquisition through to the management process. So what I'm going to do today is speak you through the development, location, the data, asset class insights, supply and demand information, some institutional research from Knight Frank, frequently asked questions, and I'll explain the purchase process as well. So hopefully all your questions will be answered following your review of this presentation. Now here's an internal shot. These are all studio apartments. So as you can see there, it's effectively giving the students the opportunity to have everything in a self-contained property. So you've got your kitchen space, obviously bed area, small table for eating, TV, you've got your desk to the left there, seat, and then the bathroom space as well. Now, from an investment perspective, here are the highlights that you need to consider and the fast facts. So with launch pricing from £137,000, this is obviously incredibly good value for Manchester. You can get a 7% net guaranteed return for 10 years. So that means there's no service charges, there's free management, no ground rent to pay. You just get your flat 7% net rate, which is, as I understand it, the best on the market excuse me, for student accommodation developments from across the UK. As you've seen already, the development is literally 2 minutes drive from the University of Salford, or 7-8 minutes walk. It's fully furnished. With the launch incentives, we're offering free furniture packs, and it's fully managed on your behalf. You've got a range of 5-star amenities here. You'll see the stunning rooftop terrace, gym, lounge area, etc., etc. Because of the structure, there's no stamp duty to pay, or there is very minimal stamp duty to pay. 999-year lease, which is good as we can get for apartments. It's an award-winning developer with over 8,000 units sold. I'll go through their track record later, but yeah, they're very substantial with investors from across 110 countries. The scheme is set for delivery in Q3 2027. So, the location, looking at the bigger picture for those that don't know, so it's right on top of Salford University. Salford University is basically Manchester. It's where Media City UK is, where the BBC Studios, Kellogg's, Under Armour, etc. are based. So it's basically Manchester, one of the best performing student markets in the country. Their retention rate of graduates is above 50%. They've got over 100,000 students there. Applications are increasing year on year. Manchester probably is the most, other than London, in-demand student market in the country. And yeah, X1 Frederick Street is set to benefit from that. Locations, you are 10 minutes by car from Manchester city centre, 2 minutes from the Uni of Salford, and then you've got the Manchester airport 25 minutes away as well, which is really easy access for parents and friends, etc., etc. And it's M6 postcode. Just in terms of the specific location, this is the development site here. As you can see, it's a 2-minute drive and a 8 to 10 minute walk, depending on how fast you walk, to the University of Salford there. It's quite a big campus, Uni of Salford, so yeah, there's various spots that you can go to, but if you just take a look at that one, that gives you an idea of literally how close we are to this university. Now, student accommodation, for those that don't know it, PBSA, purpose-built student accommodation, offers various benefits that you don't get from traditional residential property. For example, if you're renting it to a young professional or a small family, etc., etc. So let's go through those now. So number one, predictable fixed income. So with student accommodation developments, they typically come with guaranteed returns. In this case, it's a market leading return. So it's a 7% net return guaranteed for 10 years. So irrespective of occupancy rates, late rental payments, bits and bobs like that, it doesn't matter. You're still going to get your fixed return, which provides a huge level of certainty and predictability for investors, which you simply don't get with residential properties. Hands-off management, so it's a fully managed structure, and this is not managed in terms of how it would be with a residential property where the management company would ultimately rent it for you, but if there's an issue with the boiler, if there are deposit issues, late rental payments, they're still going to contact you and let you know. With this structure, they'll just take care of everything. You just get your flat income paid to you. So it's really good in that sense. High demand and low supply. So yeah, we've got projects right on the doorstep of this development from the same developer, which are achieving 100% occupancy rates. So the demand for this type of asset in the city is huge. And in fact, that's the case from across the UK. Recession resilience. So we've seen through COVID, Brexit, blah, 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 that student numbers remain high in the UK. People still want to go to universities and have that experience, especially from high caliber unis in major cities in the UK. The UK's education system is renowned globally, and we're seeing that in the UCAS applications and the ongoing increases for demand. Global tenant base, so we see a lot from Asia, particularly China, with regards to wanting this type of property and wanting to go into these universities. And that's really important because you have the guaranteed return, but you've got to make sure the underlying demand is there as well. And capital growth potential, so Salford's performed exceptionally well over the past 10-15 years, but Savills are forecasting the same for the future. So a 31.2% capital appreciation rate is forecast for the Northwest region up until 2029. And institutional credibility, this is one of the most important factors for me, because ultimately you want to follow the smart money. There are huge amounts of invest going into this at the moment, and we'll go through that shortly. Now, here's the breakdown of that institutional data. So firstly, if you click on this link, you'll be taken through to a report from Knight Frank, which gives you a breakdown of the institutional capital that's flowing into the UK student accommodation market currently. Now, this isn't general HMOs and old houses, etc., etc. This is purpose-built student accommodation. So developments which are built specifically for the sole purpose of renting to students. Now, in their Q2 report, they showed that there have been £1.6 billion worth of investment into this asset class in the first half of 2025, which is far above the 5-year average of 1.1 billion. So, and we've got 2 billion under offer, and really important data here, UCAS applications up 1.3% year on year, with international applicants up 2.2%, and then Chinese applicants up nearly 10%. Okay, so the demand is surging, and institutional smart money, for those that don't know what institutional, it's basically professional investment firms, right? Pension funds, insurance funds, family offices, etc., corporations. And if they're looking at this, you can imagine the level of due diligence and research that they do. And if they're confident going into it, it's a great indication to private investors and retail investors that, you know, this is a mature asset class which is standing their tests and their research, right? And as you can see here, looking at the supply and demand imbalance of the actual properties themselves. So why does this matter? Because it gives you proof of concept. It gives you confidence that it's a strong investment model which is, you know, seeing underlying demand. Cool. So moving on now, here you can see a CGI, so an image of the development of when it's finished and what to expect. As you can see, it's positioned here, that incredible rooftop terrace right on top of Manchester City and all it has to offer. Now, in terms of the investment returns, let's just break this down quickly. So with our launch pricing, we have secured discounts of £25,000. So it means you can invest from £137,000, right? Now, Savills are forecasting, as I touched on, a 31.2% capital appreciation rate on average for properties in the northwest region by 2029. Okay, so with student accommodation, typically it sees slightly slower appreciation rates compared to residential property. So what we're saying is, let's assume it achieves a 20% growth rate from now until 2029. Okay, now let's extrapolate that over a 10-year period. It gives us an average annual growth rate of 4.63%. So what we're saying is, if we achieve a 20% growth rate by 2029, and then it continues at that rate over a 10-year period, you're looking at a profit/equity rate of just under £80,000 in profit. Okay. Now, if you look at the rental income over 8 years, we say 8 years instead of 10 years because there's a 2-year build time frame. That also gives you just under £80,000 return. So in this case, £76,720. Guaranteed income, okay? So that's after service charges, ground rent, management fees. There's no deductions. If you add up the equity gain and you add up the rental income, you're talking about a flat rate of £155,000, 280 in terms of the profit that you're going to make from just investing now at this stage over the next 10 years, okay? So 155 grand basically. Now that's underpinned by one, strong investment fundamentals, i.e. good location, good student demand, great rental return, etc. But also that's a very conservative rate. So we're actually allowing for a contingency. So we're saying, look, it could increase more than that, but we're just looking at that 4.63% rate. And if you actually look at the Savills data, it's saying for residential property, it can go up to 6.57%. So we are being very, very conservative and realistic with these projections. You know, we're not just giving out random numbers. This is calculated in a data-driven investment decision, and you're allowing yourself to make 155 grand over 10 years from getting into an investment with just a 50% deposit. Now, just touching on the stamp duty, I mentioned earlier that there's minimal stamp duty. The reason being is because it's purpose-built student accommodation, it doesn't have the same stamp duty rates as residential property. It goes under the non-residential rate. So that can mean that you are only taxed in the SDLT aspect of 2% above £125,000 in value, okay? So if the value is £137,950, what we're saying is that will equate to a £259 stamp duty bill, okay? And we have seen this from the developer's previous projects, etc. Obviously, your solicitor will confirm this for you, but this is an indication and an indicative rate of what you can expect. If you compare that to a normal standard buy-to-let residential property, you're going to be at that value, you're going to be paying over £7,000 in stamp duty. So that's another one of the benefits from this asset class, and that does go for overseas investors as well. Here's another internal shot here. As you can see, very nice, spacious, neutral colours. They're going for not as much first year students, more master's students, final year students who want that privacy. They want a bit more of a mature approach. You know, there's no bright, crazy colours, etc. They've got close to proximity to the uni, and they can also get into town quickly. And as I said earlier, giving themselves the opportunity to have that privacy and peace and quiet, so they're not sharing a kitchen, etc., etc. Now, here's a overview of the track record of the developer. So this developer, they've done many sites in Manchester. Many of those are student sites as well. So Cheltenham Place, X1 The Campus. If you look at X1 The Campus, for example, that saw 100% occupancy within 2 months of its original launch, and is fully booked for the 24-25 academic year. And this is minutes away from X1 Frederick Street, and it's from the same developer. So talking about a track record of specific projects, you know, similar size, similar location, same asset class, etc., etc. So we foresee X1 Frederick Street performing in a similar manner. Now, just to touch on the developer, I'm not going to read through every single point here, but they are very substantial. Established in 2009, they've got investors or sold over 8,000 units, 110 countries. They're very big. As you can see here, they're award winning, so they've won all the awards. You can have a look through these slides. Completed on over £1 billion of developments themselves. Here's a track record of their previous projects and the values of them, all documented, showing the completion date, showing how they're sold out, etc., etc. This is a big, high caliber developer, guys, which is why I call this an institutional grade asset, because of the location, because of the build, because of the track record. You would get this kind of caliber of investor purchasing these type of assets. Okay, here's a shot of the rooftop gardens. Again, the idea is to create that lifestyle, that community, what you get with that university experience. Okay, particularly important for people that, you know, again, final year master's students, they're not going to be in the university for 8 hours a day every day. There's a lot of independent home studying, and this would be amazing for the students to get some peace and quiet, get some fresh air whilst not having to leave their property. So my personal thoughts on this, as I touched on, really high caliber student project. And I must stress that, guys, because we are offered to market student projects across the UK, some of them from as low as under £50,000, and we don't touch them, okay, because they're not good enough quality. They're old, they're run down, they don't get the rental rates, they don't get the occupancy rates, they're not close enough to the uni. There's high chance of a developer, you know, not delivering, etc., etc. It could be any number of reasons, but this is one that as soon as I saw it, I thought, yes, we have to take this to market. Okay, so you've got a 7% guaranteed net return for 10 years. Again, show me another student project on the market in a premium city that has this return. You will not find it. Okay, and one of the things that I want to point out about this is we're not buying it based on purely the guaranteed return. We're buying it because even without the return, it's likely to be a strong performing asset. Okay, so as an investor, you are not relying just on that documentation or that contract with the developer. You know that this can achieve good rents, good occupancy rates, and generate a strong return without the guarantee. But having the guarantee from a big credible developer just gives you peace of mind, confidence, and you're able to forecast your financials very accurately. Hands-off management, so fully managed. You'll just have the income paid into your account whenever it's due. Prime student location, we touched on that already. Proven developer, we've touched on that already. No hidden costs, so no ground rent, guys, no service charge for 10 years. You're going to get that true 7% net return. High spec and modern design, that's a given these days. Quite frankly, it has to be high spec to compete with other student developments, because they are, you know, these are not rundown halls of residence which are provided by the uni. These are private schemes which are up to a very high caliber. And because this development is short-term let approved as well, during the summer periods, they can actually get young professionals in, etc., etc. But you've got the gym there, you've got the rooftop lounge, you've got self-contained apartments, you've got the residence lounge, etc., etc. So yeah, really strong development itself. In-demand asset class, both from a tenant perspective and from a buyer's perspective or investment level. And straightforward purchase structure. Look, you chuck in 50% now, 70 grand. Completion Q3, you pay the other 50%, and then bang, you've got your income and you've got it there for a very, very long time. Cool, so frequently asked questions. Again, I've been monitoring and selling these assets for years and years, guys. I used to work for student developers. I've done management of these types of schemes. I worked for companies like Unite Students, CRM Property Management. They're two of the biggest players in the UK. So yeah, I really have an understanding of how this type of model works. So to run through a couple of questions, what if there are delays, or what if the developer goes bust? So the first thing to think about is that the developer is incentivized to complete the build as soon as possible, because they're not going to get your 50% second payment unless they do, okay? However, there are long stop dates in the contract, which means if the developer goes beyond those dates, investors have the right to terminate the contract and recoup their original deposit, okay? So you are legally protected in that sense. But the main thing here is this is a fully funded development, so the developer's not relying on sales to complete the scheme, and they are a substantial developer, okay? Very, very long track record of student sites, residential sites, different locations. They know this market, they have their preferred suppliers, they do a lot of stuff in-house, okay? So it's a very reputable developer with a proven track record, and it's a fully funded scheme. So the likelihood of the developer going bust is extremely unlikely based on logic and evidence, not just on my opinion, okay? Why should you pay a 50% deposit? Well, you're paying that to secure an institutional grade asset in one of the UK's strongest performing residential markets and one of the UK's strongest performing student markets, okay? So that deposit locks in your discounted launch price. We've got other incentives that we're going to include as well, but it does lock in your 10% return. You're backed by strong investment fundamentals. You cannot buy this type of investment just ready, sitting on the market. It's virtually, well, it is impossible, okay? You cannot go on Google, Rightmove, Zoopla now and buy a new development with a 10-year fixed return in this location. It just doesn't exist. So you have to buy off plan to get this caliber of asset. But what you've got to think about, guys, is firstly, if you're a short-term investment, don't buy this. I've got other stuff that will be more suitable for you if you're looking to exit during the construction period or a year after completion. But if you're looking for a long-term income generating asset that you want to keep for 3, 5, 7, 10, 15 years, this is absolutely perfect. It's low risk, it's hassle-free, you're going to have your fixed income there, you know it's a good location, you know there's strong student demand, you know there's a good developer there. So to lock that in and to get all those benefits, you have to put in your 50% now. It's that simple, okay? And don't forget, you're going to benefit from the 50% deposit level during the construction period. In other words, you're securing this price now with the discount and you're only putting in 50%, but let's say Manchester increases by 20% over the next 2 years, you're going to get that 20% increase on the full property value. So people often think their capital is not working for them if they're buying off plan. It's incorrect. It is working for you, and it's highly likely we can see really strong appreciation rates during that construction period. So even by the time you get your keys and pay the next 50%, you would have made that margin, that equity and that profit, okay? Can I use a mortgage? No. For purpose-built student accommodation developments, it's across the board. Mortgages are not available due to the size of the units, due to the fixed return, etc., etc. It's a cash-only purchase. If you do absolutely have to use a mortgage, let us know, because we can suggest alternative projects for you, but they're not going to give you a 7% return for 10 years, or be in that type of location or that price range, more importantly. Is furniture included? Yes, it is, for the number of units that we have available with the launch discounts, which I'll go through shortly. But yes, you can secure that if you can purchase one of the first release phase. So, a couple more questions. Is the property managed, or who's going to manage it for me, and are there running costs? So the developer's in-house management team will look after it for you. They're an award-winning operator, so they have actually won awards directly for lettings and management. So it will give you a complete hands-off approach, and there won't be any running costs for that 10-year period. So no service charges, no ground rent, no management fees. Your income is paid directly to you. Is the property managed? Oh, sorry, I've got a duplicate of that question there, so just ignore that. Can I sell my unit in the future? Yes, you can sell on the open market at any time with a high street estate agent or an investment company like ours. And given the caliber of this asset, i.e. the location, the specification, the strong rental performance, there is going to be demand for this type of thing on resale, right? So for example, if it gets to 5 years and you say, right, I want to liquidate my asset, I want to sell it, you're going to be selling to another investor. Now you're going to go to them and you're going to say, look, I've got 5 years of occupancy rates, of proven rental demand of this asset, and of appreciation rates of 20 to 30%. Okay, so you can purchase this, but it's going to cost you 160 grand or whatever. Okay, so that's going to be very attractive to the next investor because it's got that track record of performance and it's got that low risk rate. We do have investors that specifically look for what we call resale units, where it's got that demand. They're happy to pay more because they've got that track record of performance. Okay, so yes, we don't foresee any resale issues with this, and again, you're free to do with it what you want. You can get any company to sell it for you, and yeah, go from there. How do you help? So Verta Property Group, my company, we partner with developers across the UK to basically market and sell their buildings for them. Okay, so doing it for 6 years as a company, but we've facilitated hundreds of millions of transactions during that time, and we've got hundreds of 5-star reviews from our happy investors. And obviously our team have been doing it for decades. So yeah, really experienced. We don't charge you any fees for our service. Our job is just to advise, consult. Hopefully, like I've demonstrated in this presentation, we give the transparent information and information. We point you in the right places to do your research, do your due diligence, and then you can make that informed decision. Okay, we're not in it for short-term wins. We want repeat business. We want your referrals and people within your network to come and do business with us, and hence why we try and be as professional as possible. So moving on to the exciting bit, the launch offers. Now, developers, they typically give the launch pricing for the first 20 or 30 units sold. So we don't know exactly how long this will last. So if you do want to secure one of those launch units with this discount and these incentives, then let us know. So £25,000 discount, so that means you can invest from £137 in total. Free furniture pack, so it's going to be fully furnished and ready to go, a turnkey investment. A legal fee contribution up to £1,000 if you're using the panel solicitor. 0 management fees for that 10 years, making it stress free, and no ground rent and service charges. Okay, so keep that rental income for yourself. As I said here, this is not sales jargon. This is strictly for the launch batch of units. I don't know how many that will be. My guess is 20 to 30. But if you want to secure this incentive, just let us know. And in terms of the reservation and booking process, so the first stage would be to pay a £5,000 reservation fee, which locks in your unit and takes it off the market. We'll send you a reservation agreement at the same time for you to sign and return, which dictates the terms of the reservation fee and summarises the investment proposition. We'll then request your anti-money laundering documents, which will be your ID and proof of address dated within the last 3 months, which is a legal requirement in the UK. Solicitors are then instructed, which legal fees will typically be £1,650 plus VAT and disbursements, depending on the structure, etc. This can vary, this is just a guide. 50% deposit will be payable to your solicitor once you've gone through that legal purchase process within around 28 days, less the reservation fee you've already paid. 50% will be due on completion, which in this case will be Q3 2027. If you need any help with anything, solicitors, company setup, currency exchange, etc., we can introduce you to people for discounted rates and make sure you're getting best-in-class service, because we've used these guys for different things hundreds of times. So just let us know whatever assistance you need, what questions you have, and one of the team will advise you. And yeah, as I said earlier, we don't charge any fees at all. So have a browse on our website, vertapropertygroup.co.uk. Drop us an email, info@vertapropertygroup.co.uk, or give us a ring, or simply reply to your investment consultant that sent you this information. If you want to speak to me directly, just email nick.highland@vertapropertygroup.co.uk, and I'll be happy to answer any questions you have. But yeah, that's it, guys. Thanks for watching. Thanks for your time. As I said, it's a phenomenal project. It's a great investment. If you don't think this one is right for you, we can offer suggestions for alternatives as well. But for those that are looking for a cash investment, which is low risk in a great location with that fixed return and peace of mind from a developer with a credible track record, then this could be absolutely ideal. I look forward to speaking to you soon, and thanks again.